If you listen to Western trading gurus, you will hear a constant obsession with being right. They sell the dream of an 80% or 90% win rate, but today I'm going to show you my real audited trading result for April 2026. And I will reveal a truth that most retail traders do not want to hear. Last month, my win rate was exactly 33.33%. I was wrong or flat on the majority of my trades, yet I walked away with a highly profitable month, a 6.8% return on my account, and a maximum drawdown of just 0.35%. How is that mathematically possible? It comes down to the core philosophy of Ichimoku Jissen, surrender to the market and become a non-losing trader. Welcome back to my YouTube channel. My name is Kei and I am a Japanese full-time trader based in Dubai. Today we're going deep into the numbers. I will show you the trading report and I will break down a live trade to show you how taking a loss can actually be a masterpiece of trading psychology. So let's get started. Okay, let me start with the spreadsheet. In the month of April, overall, I took total of 6 trades. So as you can see, you see number 1, 2, 3, 4, 5, 6. So I take 6 trades, but you can see that there are 2 names each. So that means I take 2 positions and 2 stop losses on each trade. And that's my strategy, risk management strategy. So I take 2 positions and 2 stop losses. In total, I take 6 entries and exits in the month of April. Only 6 trades. Overall win rate, like I mentioned, it's 33.33%. So that wasn't really high. I took only win 4 positions. And for the rest of the positions were losses and the break-evens. So out of 12 positions, I took only 4 winners. However, I was able to generate 6.8% return. And that's because I keep the losses very small. And when I take profit, I take the profit much, much bigger. So overall, if you can see the drawdown part, the first one, Euro CAD, was in a loss. And I made a drawdown of 0.35% times 2. And second loss I had was on the USD CAD, which I took the 0.27% drawdown times 2 only. So I keep the drawdown small and small. And every time I enter the market, I'm always in the trending market with my strategy, KTS. So because of that, every time I enter in the trending markets, but if the market goes backwards quickly, then I exit quickly. So this way, my losses are smaller and smaller, but once the market goes towards my direction, I make lots of profits. In fact, the best trade I took was on Euro JPY, which I took on the month of April 9th. I was able to make 121 pips and 101 pips. So that was a massive win. And because of this trade, I was able to cover the previous small losses. And as I continue trading, I may have some drawdowns or small losses, but once I capture big profits, it covers the small losses and continue on this way. So that's why every time I say in this monthly performance video, look at your own graph and make sure your graph is drawing N wave. You have this, let's say you start with the drawdowns or small losses or break-even trades, but once you win, the winner should cover the previous small losses. And that as you keep trading more and more, you may have some drawdowns or break-even trades, so the curve gets a bit down like this way. But once you capture the big trends, then it covers the previous losses like this. So this is how I built my own strategy, KTS, and this particular spreadsheet is created by myself to track the record on the KTS trades only. I actually took some other trades based on some Ichimoku other strategies. So, but on this spreadsheet, this is the performance only, the pure KTS. If you're not familiar with the KTS, then you can please sign up on the free master course of KTS. You can find the link on the below description. It's free, and you get to see exactly how I plan my trades from start to the end. And my overall impression was that I was able to see lots of Euro pairs trending and CAD pairs trending on the month of April overall. Especially if you remember, in the early to mid-April, we had lots of trends on the JPY pairs. So here I took Euro JPY to trade. I actually took twice. First one I took was the 7th of April. I saw some nice trending markets, but it didn't go towards my direction smoothly, so ended up with a break-even trace. But I re-entered the market on the same Euro JPY on the 9th of April, and this one got me more than 100 pips of profit times 2. So hopefully you are able to capture the big pips on JPY pairs in early to middle of April. And after the mid-April, towards the end of April, I remember that we didn't really see any trends. So hopefully the trends are gonna come in the near future, because it's a cycle always. After big trends, the market becomes range. After the market becomes range, there's always a trend next. So simply, I am a trend follower as myself, as a philosophy. So whenever I see trends, I set up my trades. Whenever it's ranging, I stay away. And that's why my number of trades are so small every month. And the most important number for me is the profit factor. The profit factor is calculated by gross profit divided by the gross loss. So this means if I risk $100, then I gain $639 in return in average throughout the month of April. So this is the average risk and the reward ratio in terms of money value. So if you are a trend follower, or if you are building your own strategy by Ichimoku or even other indicators, check the profit factor. If the profit factor is more than 3, which is the goal of my students, then you will be able to achieve some profits. You won't lose for sure. If your profit factor is still 1 point something or only 2, then you need to work on either the entry strategies or risk management strategies. And here is a trade history report from the broker. I'm hiding my account number for security reasons, but this account is mainly KTS, but I use also other strategies to trade. And I have other account, and that one is completely non-KTS trades account. So this one is a trend follow account. So not only KTS, but also I take other trades with trend follow strategies. I use this specific account. So this data is not pure KTS, which I share with you on the spreadsheet, but actually this performance is a bit better. If you scroll down a little bit down here, then you can see that the profit factor here is 9.71. On the spreadsheet, the profit factor was 6.39. So this report shows a little bit better profit factor. But the most important thing I want to mention is that the graph. Again, when you check the graph from the broker, you take some trades and you have some drawdowns or break-even trades. But once you are able to capture the trend, then you not only take entry, not only trial, but another important thing here is the patience. You need to be patient enough to be able to follow trend so that it covers the previous losses. And for the next entries, you may have some break-even trades or small drawdowns, but the next trade will cover the future, the previous losses. So look at the graph. If the graph looks like this, for example, then that means this is gamble. You are over-leveraging and gambling the trade. Or if your graph looks like this reverse in the wave, that means the more you trade, the more you lose. So you better stop trading and backtest or practice or reanalyze your own trades. But if you have the N wave like this N wave, then the more you trade, the more you make profit, so you're good to go. Okay, today on this video, let me show you how I made the drawdown to be very small than talking about the take profit strategies, because that's the most important part in trading, the risk management part. On the spreadsheet, as you can see, my minimum drawdown I took was on USDC AD, that was 0.27% times 2. So if you add 0.227 times 2, it's much less than 1% drawdown. And less than 1% drawdown is really, really small. If you are having, let's say, $10,000, then this is much less than $100. So this is very, very small amount. So let me show you how I made such a small drawdowns step by step on this video based on a screenshot of my trades. Okay, here is the Discord group where Jissen community members and GTS graduate members are. And this particular trade, I took the trade live. So this is a screenshot when I took it. I was seeing the 4-hour to be down and 30-minute time frame to be down. And this is my 5-minute sniper entry. Again, if you're not familiar with the KTS, my trend follow strategy in multiple time frames analysis, please take the free master course so that you can understand my explanation more deeply. So here I take the entry here, 0.36751. That was my entry. And my stop loss is above here, above the swing high on the 5-minute time frame. So first of all, my stop loss is very small. It's only 14 pips of stop loss. So my stop losses are not based on 1 hour or 30, or not based on 4-hour, daily, or weekly time frames. My stop losses are always based on the 5-minute time frame so that my drawdown can be very small. That's one of the reasons why my drawdown becomes small if the market goes against myself. And plus, this is another secret of my strategy, is that I look for the reasons for the entry. In other words, I look for the edge to enter the market. In this particular trade, I use the Bollinger Bands and stochastic and the candlestick patterns and the lines. For this one, you see the previous support level breakout over here. So I look for multiple reasons to enter the market. And the reason is not only because I saw that my win rate becomes higher, but also I know when to exit my trade if the market goes against my direction. I hope that makes sense. So again, I look for the entry reasons, entry edges, not only to raise the win rate higher, but also to know exactly when to exit my trade if the market goes against myself. So in this particular trade, my exit area should be here. So that means as I monitor the market, and if the market goes up and breaks 1.36809, then I will exit manually. And now you may wonder, so why do you put the stop loss above here on the swing high on the 5? In this case, you should have placed the stop loss over here, right? But I have the clear reason why I don't do this. And this is also based on my experience that let's say if I put the stop loss here, in this case, this would be like only 6 pips of stop loss, which is too small. And that's one of the reasons. And another reason why I don't place a stop loss here is that, for example, the market goes up against my direction, and sometimes there is a pin bar or doji or long wick up like this way, which takes out the stop loss. And then the market goes towards my direction, but without my positions anymore. So maybe you have experienced this kind of situation before. So that means if I put the stop loss here, that's too small. Because I'm planning to exit here, but at the same time, I want to monitor how the market comes up to here and how the market breaks my exit area manually. And if it breaks here, then I will exit manually. So I just press my close button and I close my positions here manually. So it all depends on how the market retraces and how the market goes up to my exit area. Other situation could be the market after this, it could be range all the way, like this way. Sometimes it touches here because I take this as one of my entry reasons. This level is really strong. So the market may test this level a few times, then eventually goes down. And as it tests here, sometimes there's a fake breakout or fake shootout. Then eventually the market goes down. So I prefer to monitor the market manually, and if the market clearly breaks the high, breaks this level, then I will exit my trade manually. So to me, stop loss is the seat belt on the highway. On the highway, you wear seat belt so that in case anything happens, it protects your life. So in case anything happens in the market, and if the market goes all the way up to here, then my worst case scenario is the 2% drawdown. And in this reason, I put my stop loss over here. So this is kind of different psychology as usually people trade. This is my original way to place my stop losses here. So again, I place stop loss, but that's my worst case scenario in case anything happened in the market. But I have the clear exit rule and exit area way before the price hit the stop loss. And based on that logics, I risk 2% to the stop loss. Okay. 2% to the stop loss. So let's say if you have $10,000 account, $10,000 account, if the market reverses and hit your stop loss, then you lose $200. $200 drawdown is the 2% of $10,000. So that's how I design my stop loss. So depends on how much you have in your account, this amount number will be different. So that's why I don't really talk about how much part. I only talk about the ratio part only. So 2% drawdown is being my worst case scenario. I always exit before the price hit the stop losses. And that's why my drawdowns are very small. And in this particular trade, what happened after this is that the market went against my direction. This is my screenshot of the MetaTrader. So this was my sell entries, and the market went up. And you see that this was the horizontal line I drew in TradingView. And the market clearly broke above the line, and that's exactly how I exited my positions. So that's why you can see that my drawdown is very small, 0.27% times 2, which is very small for me. You know, I have a deep sympathy with Ichimoku and its creator, Goichi Hosoda, because he didn't just build an indicator, he built a philosophy of equilibrium. Living here in Dubai is very easy to caught up in the noise, the fast cars and luxury and the need to constantly win and show off. But the market does not care about your ego. When you learn to accept 33% win rate and still walk away with a 6.8% return, trading stops being stressful. You become detached from the stress. You become like water. You flow into the market when the equilibrium is heavily skewed in your favor, and the moment the market pushes back, you flow out. So you must drop such mindset like beating or conquering the charts. You cannot conquer the ocean. You can only learn to surf its waves. April 2026 was a great month for me, not because of the profit itself, but because I executed my risk management flawlessly. 4 wins and 4 losses and 4 break-evens. Maximum discipline. If this perspective resonates with you, and if you want to learn how to master Ichimoku and my trend follow strategies, not just the technicals, but the mindset of a non-losing trader, you're more than welcome to join my Ichimoku Jissen Community or my 3-month mentorship program, Global Trading School. Please check the description for details. And please leave a comment down below. What is your current win rate and profit factor? And more importantly, are you able to take a loss without feeling emotional pain? Please let me know in the comment. Thank you for your time today. Remember to trade as if you have no positions. Surrender to the market and protect your capital. See you in the next one. Stay healthy, stay safe, stay gold. Mata ne. Bye for now.